GM everyone, welcome back to another episode of Touchcraft Podcast. We have Dave from EtherFi Ventures. That's right, EtherFi has its own ventures arm, and we're going to dive everything into it and what they're actually up to and how they're investing in these current market conditions. Welcome to the show, Dave. How are you?
Good. How are you guys? Thanks for having me.
Awesome. Uh, First basic question I think everyone has: why does EtherFi even have a VC arm, and what's the primary focus there?
Yeah, we get this question a lot. So I think the original idea basically came from the fact that Mike and Rock were doing a lot of strategic angel checks into various crypto projects, and then realized that they could actually turn this into a product to offer to users. So that was kind of like the original idea. The basic thesis is like we're chain agnostic, so we do investments into crypto and crypto adjacent companies. And then because EtherFi is one of the largest DeFi protocols in the space, we actually leverage the EtherFi network kind of TVL connections to help our portfolio companies with distribution, because we think that distribution, go to market, that's actually one of the main challenges that we see a lot of founders deal with in crypto, actually getting their products out there. And with EtherFi kind of as like a big strategic partner or a day one customer, we can really solve a lot of that problem for our portcos. So that's kind of primarily where we operate. And that's the thesis that we bring to the investments that we do.
That makes sense. Do you want to also give like a little bit of a short background on yourself? Like, what were you doing before you were the GP of EtherFi Ventures?
Yeah, sure. So I got my start in TradFi. Actually, had studied economics in undergrad, and then basically went into wealth management, and then asset management after that. Got my CFA. Was working at Wellington, which is a large multi-trillion-dollar asset management firm, and basically launched our internal crypto research group there. Led that for about 2 years, 2 to 3 years between 2017 and 2020. Before basically leaving to go full-time in crypto. I actually went back to school to do a master's in computer science. Thought I was going to be like a Solidity dev at one point, and then just kind of by pure coincidence, got pulled into like a crypto fund of funds job my first semester at school. So was like went in computer science and then left to go work full-time at a crypto fund of funds for about a year, and then basically came back to finish up the computer science degree while working full-time at Breed VC, which was my old job. Who Jed is the GP there. He's a great guy. And we were doing early stage investments, and then, joined EtherFi about a year ago to lead the venture arm.
Awesome. I think that definitely translates from what you're seeing. That has become a trend in crypto asset management. But Dave, you mentioned something interesting in the intro, that you're trying to maximize the TVO and the network of EtherFi and tap into the venture side as well. Is that like the high level vision for you guys, where everything ties back to EtherFi and you're trying to find opportunities that kind of compound the growth of the main protocol? Is that like the vision, or is there something you're exploring that's not just DeFi but other areas of crypto and tech as well?
Yeah, that's a good question. So we view it a little bit differently. So it's not corporate VC, but we take the corporate VC strategy of it's more so like EtherFi helping our portcos bootstrap and grow versus like our portcos bringing products and users back to EtherFi. Although if they can do that, there's obviously good synergies there. And then the thesis that we have right now for the first fund is mostly focused on like financial services on chain. We feel that finance and fintech are kind of the most immediate sector that has like crossed the chasm and has product market fit. And there's also a massive opportunity there. And so we also have a very strong edge there, being one of the largest kind of DeFi operators and platforms in the space. And so it just allows us to get like really good deal flow. A lot of people like to work with us. We can also provide a lot of value add with regards to, giving people users, TVL, whatever you need on that side. So a lot of people don't know this, but EtherFi, sort of started out in the liquidity staking space and now has sort of become a full-fledged DeFi bank where we have over 100,000 users. On the card side, we're doing almost $1 billion to spend per year. So a lot of different types of like fintech services that we can tap into on that side, from on-ramping to cards to payments, etc. And then we also have a risk curator that we work with where we deploy roughly like 500 to 600 million discretionary across crypto, similar to your stakeouts financials of the world. It's called nonce. And so a lot of the deals that we bring on the RWA side, or DeFi projects that need TVL, we can actually tap into nonce and have them be like a big kind of day one partner to provide liquidity, or be an infra provider on that side. So it's pretty advantageous for the portcos that we work with. And our motto is like, we try to actually drive like real value add to our portfolio companies by giving them all this stuff. And then Mike and Rock also are experienced operators. So before EtherFi, they founded a company called Top Hat, or Mike founded a company called Top Hat. Rock was an early employee there, and they grew that to over 3 million customers, 100 million ARR, and sold it to a private equity shop. So they understand like how to build businesses, and that's why EtherFi has also been revenue positive from day one. So that's sort of like the value add and the thesis that we bring to investment.
100%. I mean, this whole pod can just be EtherFi story, but we want to get into the venture side. So, Dave, as I think you mentioned, you have the team has vast experience in DeFi, operators on large scale, and I want to talk about a little about what's been happening in DeFi for the last 3 or 4 years. But April has been kind of quite historic in terms of things we don't want to see. Compared to now, where we are with adoption, you just said there are like over 100,000 card users and all this TVL, all this growth. But people are, they're questioning DeFi in general. But how do you analyze the growth, let's say from 2022 till 2026, and these kinds of bumps you're facing right now?
Yeah, that's a good question. I mean, I think the growth has actually been pretty tremendous. Like if you look back, I got into crypto in 2017. We didn't really have any apps back then. There's kind of nothing that you could use, maybe a few things. And then even during DeFi summer, a lot of it was, I'd say, more like speculation on DeFi. Like nobody even really knew that these things could add value. But fast forward to today, you're seeing large traditional, financial players come on chain to deploy capital, doing interesting things with Morpho and Aave, setting up RWA vaults and things like that. And I think if you look at the actual numbers, like the TVL that DeFi has today versus what it had 3 or 4 years ago is like total night and day. I do think that with Kelp DAO and these kind of things happening, we kind of need to revisit like security and user experience. And there's a bunch of different, I think, gaps in that area around insurance and whatnot, to just have people at least hit sort of Web 2 parity with regards to how they feel about certain products. But I do think that like this is true momentum, and there's going to be small blips here and there that get people scared. But I think if you look at things over the over a 5, 10 year, 20-year horizon, like there's just no doubt that DeFi will win. We'll get more TVL, more people on chain.
100%. I mean, we can debate about the whole Aave situation, but DeFi United, right? Like we have already raised all the money that's needed to kind of back our ETH. But Dave, this whole cycle we just talked about last 4 or 5 years, from the EtherFi Ventures side, what are some of your biggest wins that you like to highlight, and also any misses that you kind of regret?
Yeah, we're actually pretty early in our deployment cycle. So we closed the fund back in November. It's a $20 million fund. And we've done 5 investments so far. I'd say I guess like the most successful one is ETH Gas. That'll be announced soon. But we did that within the Polychain round. Hyperbeat is another portfolio company of ours that's done tremendously well. They're basically like a hyperliquid native EtherFi where you can trade, spend, earn all native to hyperliquid, and they've built a great product. And then ETH Gas, of course, it's done incredibly well. Kevin and the team are really experienced operators, and we're big believers in that thesis of, if gas is and Ethereum is a commodity, you're going to need to have futures as well as the space grows. And there's a lot of real interesting things that ETH Gas can do with low latency, fast settlement, things like that, that we're really, really excited about.
Awesome.
Can you
Yeah.
sorry, can
Go ahead.
you talk to us a little bit about sort of IC structure at EtherFi Ventures? Like, what does, like, assume someone who's looking to pitch to you right now, what are some things that they should think about before pitching to you? Like, obviously there's the fintech angle, there's everything that EtherFi does, the expertise you guys have, but what are some factors that you sort of put into deal analysis right now?
Yeah, that's a good question. I'd say the most important thing actually is now that we have AI, I think that everything's kind of been accelerated. So if you're if you're a pre-seed company, I think really you kind of need to be at seed stage from a traction point of view in order to be taken seriously, and then vice versa. If you're seed, you should be almost having like Series A type metrics. The reason is I think AI really shrinks down the time it takes to take a product to market, and you can build a lot more things with a lot less people. And so a lot of times we see people raising pre-seed that don't have a product built, they don't have anything in live production, and I think that's just I don't know, I don't want to say like unacceptable, but in the age of AI, you should really have like a live product that people can play around with and demo. Granted, with crypto, there's additional costs around like audits and things like that, but you should have like a live product, and then try to get traction early. I think that's another big mistake is people just have kind of ideas, but there was no users or growth or anything like that to actually support that the product is in demand. And all of these things can be done much earlier and much cheaper than they could have been like a few years ago. And so that's sort of the biggest difference that we want to see on IC is there has to be live product, traction, growth, revenue. And in terms of what we look at, it's very simple. Like we analyze things mostly on kind of like three, I guess you could call it main axes. The first one is the market opportunity. So we really want to invest in things that have like a really big opportunity, right? You're going after a very large market, you're going after something that's blue ocean, or you're building something that's very disruptive to existing players. Something that can doesn't need a ton of imagination to think that it could get to 100 million, 200 million, $1 billion of revenue in 5 or 10 years. Number two is we really look for a strong team. And so that's either, you've had success building a company and exiting in the past, or you just really know everything it is about your specific problem. We want to look for like founder market fit. So someone who actually understands the problem deeply and can build and solve for it. So that's the second piece. And then the third piece is just traction and go to market. So we want to see that there's some users, that you have a business model. There's some way for you to actually like make money. I think a lot of times in crypto, people like to build cool and interesting things, but when you kind of get down into how do you actually make money and where's your kind of your cut of the revenue, like people don't really have a good answer for that. And I think that's one of the most important things that a lot of people don't quite understand is like, how do you actually build a business, not just like some piece of software or code.
100%. I think you made some really great points, and every builder, they're trying to raise, even though they might have the hottest idea in crypto, but even getting that first check can be hard during these conditions. But I want to kind of take a step back, Dave. You said that it has to be AI, and in the other, like, forget about crypto for a second, but in the AI world, like, we are seeing these mega rounds that keep happening even without OpenAI and all of that stuff. Even on the startup side of things, you keep seeing these $100-200 million raises. It's like people are not, they don't want to take the risk of investing that's not AI, that can easily be disrupted. Is that happening in crypto as well, where you have these 2 or 3 consensus bets like neobanks, perps, prediction markets, and DeFi lending money markets there as well? Anything that you're seeing where the idea is so crazy, like a moonshot kind of idea where people are not thinking about it right now, like Pump Fun, when it, like a couple of years back, that was a moonshot play. Even though the idea was so simple, like allow anyone to create tokens in a couple of seconds. Are you seeing those kinds of bets being made right now? And are you personally looking into those kinds of deals where it's not just the same old prediction markets, perps are here, obviously the different versions of those things, but anything outside of those consensus themes right now?
Yeah, that's a good question. I mean, I think for us, ETH Gas is probably that bet where we think that for a while there hasn't been block space futures in crypto at all. Like everybody just kind of settles block space in the spot market. And I think there could be a world where if you get a lot of usage on chain, people are going to need to hedge the cost of their of the gas fees and things like that. And then also people will want faster latency. There's kind of also a lot of really interesting things that you can do in the block space production pipeline of, creating unique and different and more complex transactions that will be geared towards a specific app or specific use case. So that's an area that we want to bet really deeply on, and we think it's going to be a very, very big space. And you haven't really seen that materialize in past cycles. Those are, I mean, I would say like that's kind of the craziest bet that we've made so far. A lot of the stuff that we see typically though is more like just taking crypto rails and optimizing a specific flow that is 10x or 100x better than what TradFi offers. So if you look at TradFi, there's a lot of like jankiness with how these systems are stitched together. There's a lot of complexity and a lot of costs, and I actually think that like crypto can really, really easily bring those costs down significantly. And so that's a lot of what we spend our time on. So it's payments, bringing RWAs on chain, bringing the whole kind of like tokenization and credit process on chain. And that's an area that we're actually very, very bullish on. But it's not, it's more like it's more just kind of like building a regular business, but just using stablecoin rails or using blockchain rails.
That makes sense. So Dave, what I'm hearing is it's not like there's a particular vertical that excites you guys. It's more like, hey, how can you use what we have and make it better and optimize certain aspects of the business? And then there are like projects like ETH Gas that just come out of, there's no vertical as such for it, but it's just like, hey, this is just too good to not participate in.
Yeah, I think there's kind of the way we think about it is there's sort of like blue ocean, net new things that can be done. Like one example, I haven't found like a great company to do this, but on the Hyperliquid and HIP3 side of things, I think there's a lot of really, really interesting things that you can do with listing like brand new assets. So a lot of people are focused on, how do you kind of like take existing RWAs, put them on chain, trading perps for basic, like pre-IPO stocks or stocks in general. But I think another area that could be super interesting is like trading like net new markets, right? So I've seen a few companies do it where they're trying to basically price the cost of compute and then bring that on chain into perps. There's a lot of like very interesting like materials that are like traded a lot in kind of private markets, but they don't have like a, there's no way you can get exposure on the LME. So like silicone, for example, you can't really like trade that on the LME or get exposure, but it's like a very kind of critical material that you need for the creation of semiconductors. So maybe there's a way for Hyperliquid or HIP3 to basically bring like perps for these like that, these like big markets that are traded, but don't have existing ways for you to get exposure in TradFi. Like that could be like a very interesting blue ocean opportunity. We just haven't seen like a ton of, I guess, sort of like high quality teams like building in that area.
That makes sense. Dave, we are getting close to time. This has been great so far. I think this is really insightful for anyone that's looking to sort of interact with you and your team. KG asked this question briefly, but I think we sort of missed that part. But like in all these years of investing, not just at EtherFi, has there been like a deal that sort of keeps you up at night? Like there's a few for me where I'm like, I saw this deck, I should have sort of gotten in here. Is there that one darling that got away?
Oh man. Yeah, I mean, there's definitely a bunch of deals that we saw that we didn't end up doing that ended up doing really well. I guess like I try not to stay up at night too much, getting upset. It's more about the process and like, do these things make sense? Moonshot was actually one where we took a look at that early and met the team, and then didn't end up deciding to invest. I don't even remember like what the reason was, but I think they were just too early, and we weren't super sure about like the meme coin kind of sustainability piece there. And then Pump Fun, we didn't actually like talk to the team when they were building Pump Fun, but they were building an NFT protocol before that, and there's an opportunity to invest there, and maybe like that could have translated into a Pump Fund allocation down the road. And so I guess the lesson learned is like, for earlier teams, I think the team, or in startups in general, and I think for venture in general, like it really is the team that matters a lot. Good teams eventually pivot and they'll figure something out. And so that's kind of the big lesson learned for me. And then the other piece is just the market opportunity. I think like you really have to chase things that can be enormous markets. And I think like even the ones that do well, like I think oftentimes like you kind of like, or at least for me, I sort of underestimate like how big some of these markets can get. Like, you think like, okay,
Yeah.
this thing's gotten to like 10 billion, like surely, this market is kind of tapped out, and then it just kind of exceeds that by, 10x or 100x. And so I think like, so I think like not underestimating really, really strong teams, and then making sure that you pick markets that are big, and then, they can always get bigger than you think.
100%. Bet on winners, keep betting on winners. This is awesome, Dave. Thank you so much for your time today. This is awesome. And we'll look to, whenever you guys, maybe we can do this a quarterly thing. But yeah, thank you so much.
Yeah, thanks guys. Thanks for having me.